inflation. So their dollars have to stretch further. So while they're spending more going into this season, they're still trying to be a lot smarter about it, and I think they're cautious.
How about electronics? Yeah, Mary Lou, how about electronics? It seemed like every kid, when he or she was working from home, had to have a laptop or a Chrome thingamajiggy. Where are we now in that kind of spending? Is that facing some tough comps?
So, yes, they're forecasted to be down year over year. Electronics definitely will be down. There's two things contributing to that. One is that many of the schools have provided some of the technology, that was needed when we were in that hybrid model and people didn't have the technology. And then it's one of those categories where if I don't need the technology right now, why don't I wait until Black Friday where the prices may be a lot more competitive, or I'm going to use that laptop or the iPad or whatever technology I had been using. I'm going to use that for another year or two because I don't need it. I don't need to upgrade it to still be able to go to school and do my homework.
All right, we're going to leave it there. Hey, Mary Lou, thank you so much. Mary Lou Gardner, she's Associate Partner for Consumer Packaged Goods, Retail, and Logistics over at Infosys Consulting, on the phone from Naples, Maine. We do have a headline crossing the Bloomberg Terminal. Blackstone single-family landlord halts purchases in 38 cities. They have been on a tear buying up.
I have to admit, I don't really understand their strategy. I understand their strategy, flipping them and that type of thing, but it just didn't seem like a business for Blackstone and private equity,
But it was massive.
I know it was, and they were buying up everything. And now, God, when you see these folks, back up, that is the peak in housing.
Home Partners of America, single-family landlord owned by Blackstone, will stop buying homes in 38 cities, and that company was acquired back in June of 2021 for $6 billion. Peak, top, I don't know.
I sold at the peak.
This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week. Carol Master, along with Paul Sweeney. He is in for Tim Stenovic today. One of the big stories, and we talked about it a little bit earlier when we looked at Chinese ADRs and how they're trading in the U.S. They've been on a tear for a while, but they also got a big bump up because of, again, another round of stimulus, Paul. So we're going to talk China in a big way in just a moment.
Yeah, China's been in the news, and boy, we've seen a lot of regulatory overhang on those names, but maybe a little bit of life.
All right, we'll get to that with David Riedel in just a moment. First up, though, back to a lot of news after the close. Doug Krisner.
Yeah, I want to begin with Gap. There's a lot to unpack here, Carol. The company reported adjusted EPS of 8 cents. Now, the street had been looking for an adjusted loss of 6 cents. 8 cents profit versus expectations 6 cents loss. So by that measure, better than expected. Now we have to back up and apply the context. If you include inventory impairment, and a $35 million charge related to the company's Old Navy business in Mexico, Gap posted a net loss for the second quarter of 13 cents. That compares to profit a year ago of 67 cents. So a very different company, right? Now, at the same time, Gap is withdrawing its prior outlook for fiscal 2022. Gap has been struggling to sell outdated Old Navy items. Maybe you want to call them Old Navy items. Sorry, I couldn't resist. Shares are up 7% right now in the late U.S. session. The equity market is advancing, or it did advance, I should say, in the regular session. We finished at session highs. The Dow is up 1% today. S&P 500 better by 1.4%. NASDAQ comp up 1.7%. We had a number of hawkish comments ahead of the Fed chairman's speech tomorrow at Jackson Hole. We'll be talking more about that as we continue here on Bloomberg Radio. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Old Navy? Is that like a dad joke?
Yes, it's a dad joke. I couldn't resist.
Well done. Doug Krisner, thank you so much. All right, so the U.S. and China, the world's most important and biggest global economies, as we await the next steps of the U.S. central banks and Jay Powell's comments tomorrow from Jackson Hole, China continues to amp up its stimulus measures to help out its slowing economy. And, Paul, overnight, they put a further 1 trillion yuan, or 146 billion U.S. of funding, largely focused on infrastructure spending. But many say it's still not enough to really counter the damage from repeated COVID lockdowns and a property market slump. So we really wanted to get into what's going on in China.
Right, and we do that with David Riedel, president and founder of the Riedel Research Group, joining us on the phone from San Francisco. David, again, some big moves by the Chinese government to stimulate their economy, but I kind of step back and say, if I've got an economy that's opening and closing on a regular basis, what can you do? What can you do there? What's the thinking about China these days?
Yeah, that's a real concern. I think people have been a little bit naive, ignoring some of the big headwinds that China is facing these days. You talked about regulatory oversight. We, of course, in the last couple of years had big crackdowns on big tech and data integrity and things in China, which had a big negative impact on some of the ADRs. We've heard about COVID, the zero policy really being a hamstringing the economy. Of course, the property market overhang. The one thing I think people are really ignoring is a historic drought taking place in China. Mm-hmm. Food security is a big, big deal to Beijing, and this drought is a real threat.
I have to say, we actually talked about it yesterday on air and talking about the Three Gorges Dam and just what's happening in terms of the importance of water when it comes to powering facilities throughout China. Talk to us a little bit more about what you're hearing. I'm curious, I don't know whether you've been traveling back and forth yet from Asia. I know you often do, but tell us what you're hearing about this and its impact on China specifically.
Yeah, I haven't been to China itself in a while. I've been nearby, but not in China for some time. But we have people on the ground there, and they're saying it's just unprecedented, seeing how small the Yangtze River is. We're hearing a lot about the Rhine and the dramatic weather in Europe. We're just not hearing it as much about China. And it's a big deal. I mean, 20% of their power comes from hydropower. That's really under threat. If they have to replace that, they have to replace it with coal-fired plants, which also consume a lot of water. Their arable land is really under threat from a drought that's impacting their breadbasket. And the Beijing really wants to keep the impact away from individual homes. So they're turning off power to Tesla, to Apple, to Toyota, and that's just in the last 10 days. This, of course, is at a time when they're really ramping up for U.S. holiday Christmas season demand. And so this could be a real problem for supply chains.
The story Paul and I talked about, it was on the Bloomberg, and I highly recommend everybody read it, but it talked about the Three Gorges Dam, the world's biggest power plant. A year ago, water lapped almost as high as the riverbank, where they talk about an individual where this person would go swimming. Now the level is at the lowest for this time of year since records began in 1865, exposing swaths of sand, rock, and oozing brown mud that reeks of rotting fish. I mean,
there we go. That's some good reporting right there. That's some good reporting. Hey, David, we've all learned a lot about how big of a farm exporter the Ukraine is, and how much, how big they really are in the global agricultural business. But talk to us about the North China Plain. How big is that?
Yeah, it's shocking. I mean, their production of corn and wheat is tremendous. Their production is about on par of wheat, about on par with Russia, and their corn is 3 times the production coming out of the Ukraine. So if they have a big drought, Argentina had a big one just 6 months ago, it impacted their corn production by 33%. If China has anything like that, they're going to be in the global markets buying a tremendous amount of corn and wheat. Those shortcomings, some analysis has shown, could mean they could be out there looking to purchase 20% of the corn that's traded worldwide and 13% of the wheat. Imagine the impact on North Africa, the rest of Africa and the Middle East, which is already suffering from shortages of grain, and the impact on hunger and food prices around the world. It's really quite frightening.
We talk about, I think about years ago when ESG first got, was up and running and people started talking about it, money flowing into it, David. We talked about the material impact, financial material impact on companies as a result of climate change and the environment. We're not just talking about material impact, we're talking about, existence. I mean, things we all take for granted globally, food, water, if you will. These things are really threatened.
Yeah, absolutely. People talked about rare earths about 10 years ago and how China was really cornering the world market on rare earths. Rare earths are not that rare. They're ubiquitous, but China is the only country that's had the willingness to take the environmental hit to mine aggressively rare earths. Do you know what mining rare earths takes a lot of?
Water.
Tremendous amount of water to rinse those ores and concentrate those rare earths. That goes into everything. Chips, microphones, speakers, displays of every sort. China is the world's source of something like 80 or 90% of many of these rare earths. Now, if they're running low on water, they're certainly not going to be producing those rare earths for export. And that could really be a supply chain disruption.
Yeah, this is troublesome. I agree with you. This is a really important story. David, sit tight. We're going to come back to you, Paul and I. David Riedel, he is president and founder of the Riedel Research Group. We're going to get back to him. He's on the phone from San Francisco. But I agree. I don't know that we're spending enough time and attention on it. I know we're trying to, but it's important.
Yeah, I know it's been said the next great war won't be fought over oil. It's going to be fought over water, and that seems like a certain scenario. Right now, let's head down to Nancy Lyons. She's down in Washington, D.C. We'll get world and national news. Nancy.
Thanks, Paul. A portion of the FBI affidavit justifying a search of former President Trump's Florida home will be released to the public. Bloomberg's Washington correspondent Joe Matthew has more on the latest developments.
We had a noon deadline today for the Department of Justice to provide its sealed, redacted version of this search warrant. At noon tomorrow, we'll have another deadline in which it will be unsealed. We don't know exactly what is going to be in this. The magistrate judge Reinhardt had said at one point that they weren't sure that it was even worth releasing because the redactions could be so broad that we're going to be sitting down looking at a lot of blank pages.
Bloomberg's Joe Matthew says the judge has accepted the Justice Department's request to keep secret the identity of witnesses, law enforcement agents, people who have not been charged, grand jury information, as well as details about the investigation's strategy, direction, scope, sources, and methods. 3 days after announcing he is leaving government work, White House Chief Medical Advisor Anthony Fauci admits he thought the U.S. would have moved past the COVID-19 pandemic after the first year of the Biden administration. But the disruption has lingered longer than he anticipated. In an interview today with Bloomberg's David Weston, Fauci reflected on the changing political landscape.
The country has come to a state where even politicians are saying things that are triggering thoughts of violence and harassment against me and my family, but that's just the state of our nation. I accept that. I don't like it.
Fauci denies those threats are what prompted him to step down. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. We're going to get back to David Riedel in just a moment. He's president and founder of Riedel Research Group, talking about some of the challenges related to investing in China. And specifically, we've been talking a little bit about the water shortages and the significance of it. In the meantime, speaking of shortages, private jets.
Yep. It's a thing.
It's a thing.
England's elite football clubs wanting to travel to games by private plane are having to do something unfamiliar. Get in line. Rising demand for chartered air travel in the UK means many English Premier League clubs are seeing their plans for getting to away matches disrupted. That's an issue that some coaches have already blamed for disappointing performances on the pitch. Boo-hoo. But I guess it's a thing. Apparently, you just can't get the planes in England because companies, individuals are flying more private, I guess, post-pandemic. I didn't know that was such a big thing.
Yeah.
Like, nobody here at Bloomberg's offered me the private travel. Maybe I'm just not getting the tap on the... But I think Tom and John and Lisa flew commercial out to Jackson Hole, I believe.
I think they did, too. It is interesting. We get a lot of kind of the charter and private jet companies, and they do talk about demand continuing, that people kind of liked it during the pandemic. Chartering a 62-seater plane to fly from London to Newcastle and back would typically cost over $95,000 US. 100-seat planes costing close to 200 pounds, according to private jet provider Victor. But it is interesting to see these are demand. And you're right, Paul. It's as they've switched during the pandemic and they've gotten comfortable with it.
Yeah, but, if I'm a Premier League footballer, I'm not flying commercial. I'm not riding the bus. I'm in the big leagues here. But I'm sure there's also a supply chain issue aspect to this as well, which is, a lot of the, the Boeings of the world and the other manufacturers, supply chains hurting their production.
Yeah, exactly. So, right. It is interesting to see this, and it's just another sign of the times. And it's you try to square this with kind of some of the other things or discussions we have about concerns about costs and slowdowns in the global economy, and yet you see this happening, and kind of speaks to another story. All right, you're listening and watching Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market closed at session highs today in spite of some hawkish commentary from a number of Fed officials. In one example, the head of the Kansas City Fed, Esther George, told Bloomberg TV the Fed's funds rate, that's the Fed's benchmark, it may have to rise above 4% to defeat inflation. If you're wondering, the current target for that rate is between 2.25% and 2.5%. Tomorrow, we will hear from the Fed chair himself, Jay Powell, speaking at the Jackson Hole Symposium. 10 a.m. Wall Street time, special coverage here on Bloomberg Radio. Before he speaks, we'll have the Fed's preferred measure of inflation, the PCE deflator for July. That will be released at 8:30 a.m. Wall Street time. After the bell today, Gap reported adjusted EPS 8 cents. The street was looking for an adjusted loss of 6 cents. The company noted an improvement in sales trends, but at the same time, Gap withdrew its full-year projections. The stock right now is higher by nearly 9% in the late U.S. session. We also heard from VMware after the bell. Adjusted EPS for Q2 above the average estimate. Stock right now is down by about 1.3%. And Dell Technologies with quarterly sales that were merely in line with estimates and executives signaling that customers are becoming a little more pessimistic. Dell shares right now weaker by more than 8%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. Let's get back to David Riedel, president and founder of Riedel Research Group. And he is actually, you can see him via Zoom in San Francisco. So for those of you watching on YouTube, you can see David. Hey, David, so I am trying to make sense. There's delistings, there's regulatory. You're talking about the water catastrophe. Let's just stick with the water story. How do you think this ultimately plays out longer term?
Well, I think China is going to have to be much more efficient with their use of water. 65% of their water consumption is industrial consumption. And so that on top of that is agriculture, and on top of that is residential. So clearly China has long been the inexpensive workshop of the world, being able to mobilize very large workforces very efficiently and effectively to build companies like Foxconn and so on that can be very responsive to developed world needs. Given the aging population, given the pressures on their environment, including water, I think that's something the world can't count on in the next 10 years the same way they did in the last 10 years. So I worry about them exporting inflation the same way that they may have exported deflation in recent years. They can't make more water. You can print more money, you can't print more water. So they really need to be careful with the resource that they have. I think they're going to have to dial back usage.
You know, David, with all the challenges that investing in China has been presented with over the last couple of years, I'm talking regulatory challenges, COVID and their response to COVID, their policies there, now some of these resource issues that you're highlighting. I have to ask the question of every EM investor that I talk to, is China even investable?
China cannot be ignored from an investment point of view. Second largest economy in the world, fastest growing consumer market in the world. Really the tail that wags the dog in terms of demand for commodities and all kinds of things. But I think smart investors are trying to find other unique ways to play it. Perhaps there are domestically listed plays that cover unique aspects of water treatment and water supply and so on and so forth that provide an opportunity to benefit from the changes in the water landscape. Maybe there's regional players or other countries around the world that benefit from China's current challenges. We've been talking to our clients a lot about Mexico as an alternative for supply chains if China's under pressure. I wouldn't say China's uninvestable, but you do have to be very careful with these U.S. listed entities that are under constant threat of delisting and often are plagued by poor information flow and so on and so forth, as well as some of the domestic players that can get hit by regulatory pressures or changes in environmental regulations like I think we're going to see coming in the next 5 to 10 years.
All right, David, a couple of years ago, we started to see the Chinese government crack down on some of the U.S. listed Chinese companies. My favorite example is Alibaba Group. And when that company came out, I knew the company quite well. And most investors here said, oh, it's just a great way to play the growth of the China middle market. I don't need to know anything else. Well, I kept telling people, you need to know this China risk thing because it's real, and I don't know how it's going to come or what it's going to look like, but if it occurs, it's going to be really bad. And it did occur with the Chinese government cracking down on some of their tech companies. Is the worst of it behind for these tech companies?
I don't think it's fully behind us quite yet. I would add on the Beijing pressure. I would add on the fact that you're investing in Alibaba. You're actually violating Chinese law because foreigners are not allowed to invest in many aspects of e-commerce and online activity, including most of what Alibaba does. You're investing in a Cayman Islands entity that doesn't have any connection to the business in China, other than the fact that some of the business reports up through it.
Nice lawyering.
I would add that. BIE, that's a real concern. And it should have been a concern in the beginning. We were telling all of our clients to be concerned about it. The regulatory pressure was something else. Now, I think for many companies that do not touch on large flows of data, large flows of consumer data, I think you're probably okay. The worst of it's probably behind you. Chinese business does need some exposure to U.S. capital markets. I just think some of those big players like a Baidu or a QFin, one of these companies that have a lot of exposure to data flows, I think they're going to continue to be under pressure to delist in New York and list exclusively in Hong Kong or Shanghai.
You know, it is interesting on a day that, China did another round of stimulus, David, and then I look at the NASDAQ 100 and Pinduoduo, JD.com, Baidu. I mean, they are your top gainers in the NASDAQ 100. I get it. I guess I'm just trying to figure out that it does feel like China is going to continue to be this place where the rules could change in a heartbeat. And I don't know how investors get through that.
Yeah, and if Xi Jinping gets another 5-year term like we're expecting at the political meetings before the end of this calendar year, I think he has another opportunity to rewrite those rules. I think investors do need to be careful, especially when companies are touching large amounts of data, like I said. Right. That's something that China is going to protect to the end. They may find some compromise on some of these names, but they're not going to get through on all of them. And I think that's a real concern for the SEC and for U.S. investors in these U.S. listed companies and ADRs.
David, it used to be that, buy a big multinational because they were going to, build a footprint in China, a global multinational. That was the way to play China in many ways. I feel like that's going to be much more difficult going forward. Do you agree?
I do agree. I think time after time we've seen examples of Walmart, even some examples of Tesla showing up in China in a big way, and then suddenly coming under regulatory pressure, coming under regulatory scrutiny, and getting in trouble. And I think a lot of times the benefits longer term accrue to the domestic partner in that joint venture or in that operation. So I would be concerned about trying to play it that way. You might find some well-positioned Asian-based companies that can find their way through the network of Chinese operations and regulations. I think that would be better than buying a global company like a Nestle or a PepsiCo, like so many people used to do as an alternative way to play China. You have to be more nimble these days.
All right, we got to leave it there. David, thank you so much. We said to our Paul Brennan on our planning call, how great to have you booked when we got the news out of China overnight. So we really appreciate your insight, as always. David Riedel, he's president and founder of Riedel Research Group, joining us via Zoom from San Francisco. Has been following really the Asian markets overall for a long, long time with really some in-depth analysis. As he says, he's got a lot of people on the ground, so they're seeing what is going on, right?
It's like that, it's very similar to the China Beige book. Speaking to those folks, they have people on the ground. They have very unique data sets that are not government data dependent, and they get some really interesting views on there. So there's some folks out there that are doing some really good work in China, and that's what you really need because the information flow can be a little spotty.
Yeah, absolutely. All right, folks, that's going to do it for this Thursday edition of Bloomberg Business Week. I am watching shares of Gap up about 8.5% in the after hours, despite bringing down some guidance. Affirm is down about 15% in the after hours, so we got a lot of stocks already on the move.
Yeah, a lot of stocks ready to move, and of course, we'll be focusing on Jackson Hole tomorrow. What is Tom Keene, John Farrow, and Lisa Bromwich doing in their spare time?
Probably having a good piece of beef right now.
Yes, exactly.
All right, folks, that's going to do it. Have a good and safe evening. This is Bloomberg.